President Trump speaking earlier. Let's bring you more live analysis now, and for that, we turn to Ozan Özkaral. He is the founder and managing partner at Tanto Capital Partners, joining me live from Istanbul this morning. Ozan, welcome to the program. Great to have you on today. I know you were also listening into this history-making in terms of time speech from the US president earlier. What was your key takeaway?
Good morning, Dan. And yes, it was history-making in the sense that it was probably the longest one that any US president has made, but also it was quite domestically focused in its nature. It was clearly a setup piece for what will potentially be a very heated midterm elections in the US. It was light on foreign policy until the very end. And I think one notable element of the speech was that he did not really mention China. And that's important in the context that the world that we're living in, the real geopolitical battle is between US and China across many, many industries, semiconductor manufacturing and AI being one of the most notable ones. Now, this was perceived as a diplomatic effort to prepare for his pending meeting with Xi Jinping over the next few weeks or so. He did mention Iran, although it was much more conciliatory in tone.
Why do you think that was so, Ozan? Just specifically on this China question, as you say, the president largely omitting any line on China through the course of this address. Was that to not front run the meeting with Xi, or was there other factors at play here?
I think it was very much strategic, in order not to front run the agenda items that he's going to have to pick up with Xi Jinping going forward. And again, I take it back to the most important part of his speech vis-a-vis the global markets, international investors, that is the tariffs and also energy policy. Now, Dan, we are no longer in a multipolar world. What I would say is that we're in a multi-speed one, in that this industrial policy being treated as foreign policy is going to continue. Now, markets and financial markets have reacted somewhat positively to the State of the Union speech. However, what I really want to focus on is the corporate boardrooms looking to sign multi-billion-dollar capex investments. They're going to find it more challenging to try to understand what the investment landscape looks like in the context of this varying tariffs, which frankly are here to stay. The one interesting element of his speech that I thought was a very good part of his speech was his focus on data centers and how hyperscalers are supposed to provide their own energy in the capacity build-up that they have to go through, which in effect underpins the strategic requirement for US to focus on more nuclear power and the energy mix of how data centers are going to get played out. And I think that was a notable part of the speech.
Okay, so let's dig into some of those issues. As you say, the president really doubled down on tariffs. We've seen equities rally pretty hard over the past year. He mentioned the Dow at 50,000. Expand on that view, Ozan. Is the policy and earnings risk being underestimated given the trade and tariff uncertainty now?
I think they are very much underestimated. This period then is one where, as investors, we have to look at differentiating much harder than we did before. Now, the market trades on momentum, as you and I know, which is the case has always been. However, focusing on the AI trade, focusing on the private credit space, focusing on how, even though the Dow may be at 50,000, how the average American really is potentially finding it harder to survive and thrive. I think those are the issues that the whole investor ecosystem have to take a look at. In particular, the private credit space, I would say, is going to get quite challenging going forwards. And we have a number of different risk factors that the financial markets are not pricing in effectively for the moment.
So with regards to how to trade this, and you've mentioned perhaps an opportunity there, how should investors be thinking about allocation given this macro backdrop and the president's renewed focus on his domestic economic agenda?
I think what's important is to understand which sectors are going to thrive in this brave new world, and to try to cover the sectors not just from trading, financials, but also looking at the ancillary assets that will serve these sectors to grow going into the future. So, we talk about the AI trade. Fine. What does that mean? you don't necessarily have to go long the Mag 7 for semiconductor manufacturers. Perhaps it's an idea to focus on the energy infrastructure part of the AI play, including metals and mining, by the way. So if you're looking at private credit, fine. There's an issue, I think, residing within the insurance balance sheets on private credit. Does it mean that the sector is not going to offer opportunities? That's not what I mean. What I really mean is that we have to go and dig down a little deeper, understand the credit quality. So for investors at large, I think this is when active management is going to really become more important, because one size does not fit all. And I think we're going to see this play forward even on a more pronounced manner within this year.
Ozan, let me ask you about the energy outlook as well, because the president highlighted record oil production, rising gas output as well. Is this U.S. energy strength still a bullish story for markets, or is it largely priced in?
I think at some stage, U.S. is going to become a swing oil producer. If you take a look at U.S. plus the LATAM play at large now, that will take time and capital and effort. But when it comes to hydrocarbons in particular, U.S. is looking better hedged than before. I think within the energy play, what we have to really look at is how and when U.S. and other countries potentially will have the capacity to bring the nuclear power into play. Because let's face it, all this hyperscaler build-out, the data center build-out, is just not going to be feasible with hydrocarbons or transition fuels alone. Now, that's on one end of the spectrum. What is interesting to me is that whilst this multi-speed world order is evolving, there are certain jurisdictions in the world, like Europe, that are still focused on imposing the carbon market regulation, the e-fuels regulation. So we're going to see a disconnect between how the US markets perform vis-a-vis the energy play versus how higher regulated markets or highly regulated markets like Europe perform as well. But I do think that the US energy independence and strength is going to become more visible and pronounced over the medium term.
Of course, we're also watching very closely in the region the resumption of the Iran nuclear talks at the end of the week. It seems as if the president was working to perhaps throw some cold water on what is a really hot scenario in the Middle East now, given the size of the US military buildup. At the same time as well, coming into the State of the Union address, the Iranians also appeared to show signs of a willingness to push for diplomacy. Ozan, I want your take on the state of play as we come back into the resumption of these talks. If the Iran talks break down, what happens next, and what is your oil price risk scenario?
I think both sides seem to be playing for time tactically at the moment. There are talks being held in Geneva that are going to be quite important this week to understand whether we have a framework of a plausible agreement or not. I think both sides would want to find a solution. However, there are obviously areas where, nuclear energy is a no-go for Iran, and obviously Iranians are arguing that they want to have peace with nuclear energy. But if these talks break down, the chances that oil prices and energy prices, oil prices remain somewhat elevated are there in the short term. But I do think that in the medium to long term, it's only a single direction. Oil prices will come down and will remain at a range-bound kind of level. But in the short term, we may see spikes time to time. When it comes to the plausibility of having an agreement, a credible agreement with Iran, look, there are two carrier strike groups close to Iran, and those positioning of such assets are not done on a kind of taken lightly. So the risk of escalation in Iran is still very much there, although I do find it somewhat encouraging that